Well, hello, folks. I'm L.A. Little, and this is your weekly NeoTA wrap. We take a look at these markets, and we do it from a neoclassical perspective. Each time we ask ourselves what happened last week, and what does it tell us about the coming ones. I do this show every Sunday night, broadcast at or before 10 o'clock Eastern Time. It's archived on YouTube. It's under the channel L.A. Little. You can catch us there. You can subscribe to have notifications anytime content is pushed to YouTube from myself. As far as the markets, let's take a look at what happened here and consider where we are and maybe where we're going. First full week down, Russell down more than the rest. The Nasdaq actually outperformed. That's kind of a good sign. Primarily that was NDX pushing, and a lot of that was Apple's. So you've got down to start the year, and this thing is not really it's not barnstorming like it was the last two, at least not so far. But as we know, it's still a bull market. That can change, and what we need to do is concentrate on whether or not it will change. And with respect to that, let's turn to the chart. So I'm going to pull the weekly chart over to start with here, and this is the S&P 500. If you remember last week, coming into the week, we were starting to sell off. Monday, Tuesday, we down pretty good, and then we chipped back around on Wednesday. We talked about that reversal here Wednesday night and Thursday, how that had set up intraday and gave us a pretty good clue for a rebound. And then settles down, or actually gets back up, and then sells off prior to the close of the trading week. So a lot of those gains got lost on Friday, and here's the daily chart. Now the bad thing is that this thing died right where it probably should have died, and I think we've talked about it here on the dailies, saying okay, this is the area that it should find sellers. In fact, sellers did show up. I think I even told you Thursday night that my inclination for Friday was that you would get some sort of a pop to test that top and then probably drop off after that, and that's kind of what we did. If we look at it intraday, and I can pull a S&P chart up here, put this on, let's see, let's just do it 2 days. You can see that spike. This is Friday morning here. You can see that spike Friday morning, pops the top, right, and then comes straight back down. And it was pretty much down all day long. Really couldn't do anything. Got a bounce up, but really kind of closed down towards the lows. So, the S&P more or less did exactly what we kind of thought it would do. And that's a good thing because, if you remember, it didn't do what we thought it would do prior to that, and I'm talking about the Russell. Remember, the Russell had set up to hold the swing point high here, and that swing point high, if we do the charts, was right there. We came down Monday, we were testing it, and then Tuesday the bottom fell out. We stayed under it a second day. That kind of said, okay, this is a range trade. So at this point, what we really have is range trades. And we have it across all the indexes. And so the question is where are the range, or what are the ranges? And on all these charts, they kind of look the same, so we'll just use the S&P as kind of our drawing board here. And the ranges really divide into three places. You've kind of got this top range, you kind of got a bottom range right here, and then you got the one in the middle. And the one in the middle is where we went up and tested the top Friday morning, Thursday afternoon, Friday morning, and failed, and then came off that area. So that tells us that this area in here is an important area. And we also know by the way it came down that this whole area down here is an important area as well. So if you're looking to this week, and if you think about the catalyst this week, you got earnings mostly starting to hit Wednesday through Thursday. You got one on Friday with Goldman Sachs, but mostly it's Wednesday and Thursday. You've got Intel and financials basically, and those are going to be what moves things this week. If you look out 1 week more, You've got ECB and a whole lot of earnings the following week. So the next 2 weeks is probably going to be the catalyst up or down with respect to where this market wants to go until we get far enough to see what that is, and far enough in my mind is Wednesday or Thursday. Then we're not going to know what that is. Right now, you're just in a range. You know what the top is. As a matter of fact, if it breaks out above this top, you know something's going on and it's probably going to new highs. Of course, there is the risk, the way it's set up, to come right back. Why? Because this could be a failed bounce. And remember, I tell you all the time, a failed bounce is what kills you. It's not the first drop usually, because there's usually always a pop back up, you know, and an opportunity to get out if you can't make new highs. So if this thing fails here and starts to roll over, then you can actually get a lower low and you can actually get something started. As a matter of fact, if you want to draw in your ABCD structure using this as the top, you can see it's going to take you right down here to test or break those lows. Now it may just hold right into this area, right, and keep the range alive for now. But then again, a bounce here that fails and comes back, so it could certainly wipe this out and get something much larger coming to the backside. So that's the sort of thing you got to look at, and you got to realize that risk is out there. And if one wants to gamble and say, okay, well, it's not going to bite me, well, then be my guest. Just load up here and, you know, cross your fingers. My ideal of the way things work is let the market tell you what it wants to do, and when it's not telling you, don't take a lot of undue risk until it does. And right now, I don't think it has told us enough yet to tell us what that looks like. So index-wise, that's what they look like. They all look the same. They're not telling us anything except for that range that we talked about is still in effect. Now, if we pull this over again to the weeklies, they don't look too bad. You know, they're still holding, the ranges are holding, the swing point highs are holding. If we go to the Russell, which to me is probably telling us a lot more than the others, this one actually held this swing point high. Remember, the Russell was testing on a weekly and a daily. It came back for an immediate retest, regenerate off the weekly. Traded underneath it, but by the skin of his teeth, it hung on to it at the weekly. Now, the problem with this is that it did it with a little bit more volume than it had back here. And so that says to me, hey, it's probably going to do some more testing down here. So I suspect the first couple of days this week, we're going to see some more testing just like we saw last week. So that's kind of the way it lines up index-wise. If we look at the sectors and say, okay, is there something in the sectors that gives us a better idea about what's happening or what might happen? You know, you've got a couple sectors out here that are looking pretty strong. The biotechs, you know, they're pressing up to the highs. They didn't quite get over it, but, you know, if you look at them on the dailies and weeklies, they look pretty good. If you look at the home builders, the home builders got a nice spike, big volume, gets over the tops, does it on both time frames. And if you look at the stocks actually got a decent bounce. Now, of course, it failed into resistance, but on the weekly, you know, it tested lower, tested back into the swing point high again, and really didn't have that much volume. So stocks doesn't look too bad either. If I look elsewhere, though, I don't see all that much that's exciting. IYT. Why is the IYT where it is when oil is 50% lower than it was 5 months ago? But we take this back 5 months, this is not 50% higher. Of course, I wouldn't expect 50, but I'd expect probably more than I see. And just going down the list here, there's a lot of sectors been hurt. XLB. If you pull it back, you know, this is not a very pretty chart. XLE, as we know, has been hurt pretty bad. Hasn't really done that well. But if you go down the list, you know, there's a lot of these stocks, or these sectors, I should say, that are really struggling to do something to the top side. And speaking of the XLE, let's pop over to the OX markets and look at oil. Now, oil tried to put in a 2-bar reversal, and it actually did. And a 2-bar reversal, if you remember, is where you come down, and we're going to talk about reversals a little bit later in the show, but you come down, you get underneath this, You get back over it, you have less volume, right? That's a 2-bar reversal if it's extended. Now, this is going sideways for 4 bars before, or 3 bars before it did that reversal. So in that sense, it's not quote unquote extended, but if you take it in the context of where it came from, it's pretty extended because it really hasn't reversed anywhere. So this does look like it's going to at least try to hold in this area. If I look at the OIL, which is another ETF you can look at, that one had a much cleaner reversal. If nothing else, it's an under-over, but I think this is would qualify as a 2-bar in my book. So all looks like it's going to try to reverse. If it is, that should help the XLE. So I would expect to see that back here this week, if in fact that read is correct, and that would help. If we look at what could hurt, that's over in the financials. If we come into the financials, you know, if I look at them on the daily chart, they're not looking so good. If I pull them back on a weekly, they don't look quite as bad, but they came down, they tested almost to that low. You've got the earnings out this week. It's testing into a retest regen off this prior high. So this is going to be a big week on the earnings, and a really big week because, you know, the market needs, at this point, the market needs their leadership on the way back up. So far, these tests haven't really had much gusto compared to what was there. So far, they look pretty good. But then again, with earnings, you're going to see the volumes expand, and we'll see if this actually holds or not. And if it doesn't, you know, that's going to be a bad thing for the markets because the financials are a big piece of it. Looking elsewhere, another thing that's probably going to help these markets is the dollar. The dollar has gotten up to a point where it looks like it's ready to come back in. And I say that only based on a projection basis. If I do the ABCD structure on this, that ABCD structure is finished. This is done. Cahoots, it's over. And if I look at it on the weekly, it's also done on the weekly. Now let's pop that one up. And let me see, it was from this price point to there, back down, back up. Also done. So you pretty much got the extensions that you're looking for on both time frames. And then if you pop this over finally to the monthly chart and look at the monthly, you can see it's coming into the lows of these highs. It's into this big bar already with a lot of volume. The volumes really aren't there on this push up, but again, they don't matter until you actually test something and then you find out whether they can get over it or not. This could retrace all the way back to here, and a lot of that could happen if the ECB doesn't move. So in other words, if the ECB comes out and says we're not going to do quantitative easing, we don't have the votes or whatever, you know, the dollar could give up a lot of those gains and the euro could get a nice spike back up. If on the other hand, you know, this thing retraces a little bit into that and then turns around and starts going back up again, it could test those tops. Those tops up are 2584, I believe, is the number. So pulling this back again here, if this retrace, say, I don't know, 24, 2375 or so into that range, then what does that potentially do if the ECB eases? Well, that would set up another ABCD structure, right, to take this thing even higher and take it beyond those highs. So the dollar is going to be a big factor come next week. This week looks like it's going to pull back. That should give the equity markets a little breathing room, not just here but overseas as well. And then finally, speaking of OX markets, let's look at the bonds. Now the bonds are doing the opposite. The bonds are going to come back, it looks like, and try to test that high. It looked to me like they were going to try to do it on Thursday. Thursday sold down, but then we got the employment numbers. This thing flipped back around. You can see the low volume on Thursday compared to Friday and certainly compared to the top. This certainly looks like it's going to come back and try to test again. That's a fear trade right now mostly. I mean, I know there's a lot of support for these in terms of buying demand, but it's also buying demand as a result of fear right now. And so I could see this thing testing it again And if it gets over it, I don't know what to think about that, because if we pull this back and look at it on a monthly, that's the highs, folks. 132.21. It got very close. 132. Well, I actually got over it. I didn't even know that. This is on the monthly. 132.21. Yeah, I did. 132.49. So, and what are we? We're how many days into this month? We are, looks like 7. I got basically 1/4 of the month in, and the volume's 64. That'd be about 250. 250, and that's got 137. This thing could blow the top away. Well, bonds are going to be interesting. Bonds are going to tell us a lot, because, if it goes over that top, I realize that there's a lot of demand, and I've talked about it before multiple times, due to the various regulations, overseas demand, so forth. But if they get over the top, these could travel quite a ways. We don't even have a B point. Well, I take it back. We do have a B point. Let's measure that. 101.17 to this top. And that's about 8 plus, and then that's 120, about 121. Not 121. Is that right? I did something wrong. 101 to, yeah, it's 18. Yeah, 18 plus. Thank you. 18 plus is 130, about 131. So this is actually finished already. It's finished on this time frame. So, and that's because it's logarithmic, right? This chart is. So that's done. So at this point, you've reached where you should go. You're so close to this high, you can easily test it. And then, after that, it's anybody's guess as to whether it's going to pull back, how far it's going to pull back, I should say. And if I'm looking at that and thinking about what that looks like this area right here is where we want to pull back to. So that's where I'd be watching. All right, let me see. That's the majors. If I go over to the overseas markets, I've pulled in a new quote system now, so I'm actually finally getting all the quotes. These markets don't look too bad. They're mostly range trades. Here's Australia coming back up to test the top. The Hang Seng, not the Hang Seng, but the Indian market's still in a sideways type move. The Brazilian market's still looking pretty tough, but French, German markets, range trades towards the tops of the ranges. I don't see anything out here that's concerning, in my opinion, on the world markets. Not yet. They're all big range trades. So let's leave it at that. And my prognosis here is that you're probably going to see this market trade in a range first 2-3 days of the week. Probably about a 20-25 point range on the S&Ps. We just hit the top of that range, so count down about 25. That's about where it might go to the downside. Somewhere in there for the next 3 days. And once we get those earnings out, Wednesday and Thursday, then we're going to get the fireworks, and we'll see what it really wants to do. Okay, I want to speak to a question that was asked of me, and it had to do with reversals. We were talking about reversals a while ago. So I'm going to pull back the S&P chart. I'm going to actually put up the SPY so we can get volumes as well on this particular chart. And I want to talk about reversals, okay? And the question was in the Teaching Trade room this week, how do you know you've probably got a reversal? And it's a little bit different from the top versus the bottom. So let's deal with the top first. And let's just take a period of time. Let's take this period of time. The first thing I always look for is I look for some sort of a range trade, or I only use two types of reversal signals. One is a 2-bar reversal, and the other is a cousin to it, which is the over/under, and on the top side. And what I'm looking at is I'm looking at a place where volume is lighter. And so if I'm going through here, here's an example of it here. So if you look at this, you've got an ABCD structure that more than completes. Then you get over a swing point high. And let me just draw these in as we go. So I'll use these drawing tools up here. It's easier. So you got a swing point high here. And as this comes up, it gets over the swing point high. Here's the test, comes back, and what does it do there? Well, it comes and does a retest, regenerates higher, a little bit back and forth, right? You've got a 2-bar, not a, let me see, would it be a 2-bar? Yeah, it is basically. This one's a 2-bar reversal. And what is that? That's where you go over, back under, you have less volume. These are the 2 bars here. You got less volume. And you've already had an extended move. That's pretty much a straight up move. That should give you, the next bar, that should give you, at a minimum, a sideways to down move the next bar. And so when you look at the next bar, you did get a sideways to down move, slightly lower, and then tries to come back a little bit farther, and then you get another push back up. Now, that push back up doesn't have, and not only that, it's not a 2-bar reversal, it's an over-under, but it has more volume. So it's not a clean sign, and you've already gone sideways now 6-7 bars. So no longer is this thing extended, in my opinion. So at that point, you know, now you're starting to rely on other types of trades that have nothing to do with a reversal signal, you know, the classic 2-bar over-under. Now up here you've got another one that sets up, but it's not extended, so this is an over-under, and that one actually leads to the pullback. And you can see the volumes where it goes over, under, has more volume on the push-up. That says that at some point this is probably going to get tested again, even though it pulls back deep. But that at this point in time it went over, the sellers took control, closed it lower. That says you could easily get a pullback the next bar, and in this case it ends up being quite a few bars. But there's other types of places that you can use, not for reversals but for like support. For example, I always talk about your anchored zones. Look at how this came back into this anchored support zone. This is a bullish anchored support zone. This is the second test of it here as it comes back. And when it tests it, it tests and tests and tests and tests and finally gets a big bounce off of it. In other words, if you can't break it down, right, that's saying the bulls are still in control. So if you test and you can't break through, then you don't turn into a range trade yet. You stay into a bullish mode and you eventually get the push up. So that's another type of signal you can use to help you with respect to, say, an entry on the long side. Just as you're trying to do a short sell at the top side up here when we were doing this 2-bar reversal over here. So those are kind of the kinds of things that you can look for. If you go over here, you know, let's look at the downside and look at a reversal on the downside. So I'm going to pull this back so we can actually get this one over here as well. So let's look at this one first. So we came up, we had a high around 197 it looks like. We pulled back, volume expands, and actually we want to pull this back even farther so that we can compare to what we're coming back into. And let me see, we're in this zone right here. So let's come back and pull this back. So what we're doing is we're coming back into, in this particular case, there's a gap area here. You see the gap? It's coming back into the gap area, and I would probably, at this point in time, we were looking at 3 months, which would have been about back here. And actually to get 3 months we'd have to close it into about there. That gives us about 3 months, about 60 bars, because that's what I'm usually looking at. So as we come back, here's a low, there's a low, here's my swing point high. So my retest regen, and note this has never been tested yet. This little bar over here, on this time frame, it hadn't been tested. So it was a breakout there, right? There's your retest regen. And as it broke out, right, does its thing, as it's coming back, I'm just looking to see if there's anything here that tell me I have a reversal. and I don't. I really don't have any clean sign here anywhere to tell me I could buy this. Not one. I have big volume, and I'm going to point them out to you. I have big volume here, here, a little bounce, big volume again, a little hold there, big volume again to the downside. And I never do a hammer reversal, test a low or anything, get a nice bounce. Now that bounce actually had a little volume, which leads it higher, and then I start to pull back again. Now I'm going to pull this over so that I can see a few more bars here. Yeah, and so I never get a clean signal. So that one didn't even yield a signal. Let's go to the next one. So here's 3 bars again. Let me take these off. And 3 months again. Now we've got a low here, a swing point low, right there. And now here you're going to get a clean sign. And actually this was a trade not that long ago. As we come down, we don't get a clean reversal. Now a lot of times these things will just blow out bottom and they won't get tested. That says that at some point it is going to get tested, but that could be a long way down the road. So we don't know when that's going to be, but that's sitting down there still on the daily time frame. It's a swing point low untested with high volume on it. Now if we look back over here on this retest regenerate, this is a bearish retest regenerate. So when I'm looking for a reversal right now, because this is a bearish one, right? It's a bear. Right now, as we come back up, I'm expecting it to fail here. It doesn't. It gets over it. And then it comes right back down to test it again. That's the sort of place that you can put exposure on with a tight stop up underneath here. It should not fill that gap, right? You can buy exposure, put a stop underneath the gap, right, and be expecting some sort of a reversal continuation on the way up. Again, that 1 bar back, volume's not heavy, right? We don't see the bears take control, and you've just taken out a bearish retest regenerate. You don't always get reversal signals that are clean, but a lot of times you'll get setups where your reward is much more than your risk, and your probability of the setup holding is pretty good, because this just told you it took this out, and no longer is it going to regenerate lower, but it's going to be some sort of a range trade, right? It's going to be a range trade now. And so you can put a tight stop, play the range, and expect to sell that range out maybe here, or if you get lucky, all the way back to the top. And if we scroll this forward, as we know, I believe this one actually made new highs, and it did here and kept going. And now we're out to where we are. So if I wanted to set up a trade where we are now, it's a very clean trade. And that is that if I break over these highs, right, I want to put exposure on. And I want to put my stops right up underneath it here somewhere. Right? I don't have to risk much, and I'm shooting for new highs. Bearish setup. What's the bearish setup? Well, the bearish setup is if I actually break the swing point lows. Let me think here. Is there a better one? Not really. See, you don't have a good bearish setup here now. A, your trend is up. That's not good. And B, you actually had more volume on the over-under, it looks like. And on the index itself, it didn't get over. It was an inside day. So right now, you don't have a good bearish setup. It may develop, but right now you just don't have one. A good bearish setup that could set up is this. Comes down, test here, fails to break it, gets a bounce, bounces up to about this level on the next bounce. So in other words, this comes back down, bounces up to this level, fails here and starts to roll over. Then you put your stop up here and you go short there, expecting a break. That would be a bearish type setup. And those are setups that you can make off the way the market, what the market signals to you. It's not always a clean reversal. The only reversals I really look for are 2 bars, over and unders, and a lot of times those 2 bars are hammers. And a hammer reversal It looks kind of like this one. Here's, no, that's not one. Let me pull it back and find one. There's probably one out here somewhere. This is a hammer reversal, right? This one didn't cleanly test the bottom. You ideally, a great hammer, you know, especially on a low, would be where this bar was like to there, right? That low, so it would test that low, have less volume, and reverse back to the top side. That's a clean buy when it does that. You know, you want to try to catch it about halfway down the hammer the next day if it gives it to you. But a lot of times it won't even give it to you, it just keeps going. And if you can recognize this on the day that it's reversing and get some exposure on, that's also a good, you know, trade. In other words, if you look at this, that was resistance right there. Once it got over it, that was a signal to buy it that day. And then of course you're already in a little more than halfway up the bar. Those are hammer reversals. They can happen on the top, they can happen on the bottom. This is kind of a, you know, a doji here. Could have been a little reversal back to the backside if it was down underneath this high, but it didn't quite do that. Those are the things I look for. All right, I've said enough about those. I'm gonna leave it at that. Thanks a lot for joining me. I appreciate it. You know, if you got questions, you can pop them over to me. It's pretty easy. Just come in here, go to the NeoTA TV, and just pop a question in, right? Details are here. We're rolling out a new service if you want to check it out, retirement accounts. If you have your own account and you want to manage it, you might want to take a look at this. Until next time, have a great one. As always, I appreciate you being there. Tell a friend, tell two. I'm LA. This is and was your weekly NeoTA wrap. Have a great night, folks, and I'll see you next time. Good night.